What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at Intel, and Intel is personally not a company that I own. However, it is one that I pay attention to every once in a while, especially when I see some articles about the business that interest me. And today I read an article about Intel and how they are spinning off part of their business, and this spinoff could be a direct competitor to Nvidia. So what I want to do in this video is I want to take a look at that news. I want to go over my opinion on what that could mean for Intel moving forward. I also want to take a look at their revenue, their EPS numbers, what analysts are projecting, and their upcoming earnings. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Intel's stock chart. And we can see here today that the stock moved up a little over 0.5%. And if we look at the last 5 days, Intel has actually outperformed the S&P 500 as it is up around 3.5%. And it has outperformed as well on the 1 month chart where it is down only 2% while the broader market is down around 5.5%. And if we look at the last 6 months, Intel is up almost 10%, and year to date it is up over 34%. However, over the last 5 years, Intel is down almost 24%, and we can see that from all-time highs of around $68, the stock is still down around 47%. So with that out of the way, what I wanted to do in this video is go over this article, and it is titled Intel Plans to IPO Programmable Chip Unit Within 3 Years. And what this article goes over is how Intel is planning to treat its programmable chip unit as a standalone business and aims to spin it off through an IPO within the next 2 to 3 years. And even after the spinoff, Intel plans to support the new business and retain a majority stake in it. They've gone as far as even naming the future CEO of this business as Sandra Riviera, who currently leads Intel's broader data center and AI group. And I find this move from Intel to be very interesting for a couple of reasons. The first being that Intel has actually done this in the past. We saw this happen last year when they span off their Mobileye unit, which is their self-driving subsidiary. And this could be interesting for Intel to actually benefit them in the long run, because currently we're seeing the FTC step in a lot and look at businesses like Amazon and Google and Microsoft and Meta and claiming that they have monopolies over their industry. And if Intel gets ahead of that game where they're already spinning off these companies and holding on to a majority of the stock position in them, so they still have a lot of rights with them, that could have a lot of benefits moving forward because they won't fall under a lot of government scrutiny. And the second reason that this is very interesting has to do with the fact that it still allows Intel to vertically integrate, as they can require this new company to purchase their chips from Intel directly. And this will also allow Intel to focus on what their core business is, which is the foundry business as well as core processors. And this is in an effort to actually catch up to Taiwan Semiconductors in the manufacturing of these chips by 2026. And this vision would be far different than what the new company would be focused on, as it would be producing chips that would be more flexible, respond faster, and could be more power efficient. They would be programmable chips that could be used in data centers, telecommunications, video encoding, aviation, as well as artificial intelligence. And right now, Intel is in need of a major growth catalyst, as we could see that their revenue has declined significantly over the last year and a half. In December of 2021, they were bringing in $79 billion in trailing 12-month revenue. However, in their most recent quarter, they are sitting at only $54 billion of trailing 12-month revenue. And in their most recent quarter, they actually announced $12.9 billion of revenue, which is the lowest we have seen since 2015, where they announced $12.7 billion of revenue. And Intel has seen the same weakness across their EPS numbers. Back in 2022, they reported over $6 of trailing 12-month EPS. However, since then, the numbers have been falling in a very significant way, as they have had 3 quarters of negative EPS numbers out of the last 5 quarters that they have reported. Currently, there are 37 analysts covering Intel on Yahoo Finance, and they have an average EPS estimate of 62 cents for 2023, a low estimate of 51 cents, and a high estimate of 80 cents. For 2024, analysts are really expecting the business to turn around, as their average EPS estimate grows all the way to $1.75. They have a low estimate of 88 cents and a high estimate all the way at $2.75. And based off those 2024 numbers, we get the following forward P ratios: 20.5 for the average EPS estimate, 40.8 for the low estimate, and 13.1 for the high estimate. And this is a very wide range of valuations, which really speaks to the uncertainty around how the business is going to perform moving forward. We will get some guidance around how Intel is actually performing here on October 26th, as they are expected to announce EPS numbers of around 21 cents and revenue at $13.5 billion. So personally, when I look at Intel, I don't plan on buying this company anytime soon, and that is for a couple of different reasons. One, we can see that the stock was trading around $25 previously this year. However, since then, it has ran up over 30%. So it is trading at more of a premium than where you could have bought it 6 months ago. And the second reason has to do with the fact that this was a company that was a very stable dividend player. However, they have had to revert back to being a growth player as a lot of competition has come into the marketplace with Nvidia, Taiwan Semiconductors, AMD, and all these other chip manufacturers really trying to jump on this AI bandwagon. So Intel has a lot of competition ahead of it and a lot of focus on growth and investing back into the business that they really need to perform and get on top of in a very quick way. They also have a very built out business which really drives up a lot of their expenses, so it makes it a little bit more difficult for them to transition compared to leaner businesses that can easily move around pieces within the unit. So for those reasons, I don't plan on buying Intel anytime soon. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.